Hi traders, welcome to the video. Please pause the video and make sure you understand the disclaimer before proceeding. Hi traders, it's Anthony here. I want to go through the last 3 trade signals I posted into VIP. Swissy yen, pound yen, and I think the other one was a CAD Swissy. So what we'll do is we'll head over to TradingView and I want to share with you my strategy. Show you why I decided to take these trades. I've got them marked up, so we'll just start from the top down. Go over to this layout and we'll go CAD Swiss. I'll explain this. So this was our trade. It's pretty simple. We retraced into this level here. This is a 4-hour order block. This yellow line is part of our indicators. This is a daily resistance. When we see our red dot after the market's been ranging, it's an opportunity, generally speaking. Actually, what I'll do is switch on the bar colors. So notice the change in the bars here. What we're looking for is these two things. Obviously a resistance level, the dot, but prior to this dot, we want to see white bars. You can see that this is ranging, but the white bars indicate that the market is ranging. So when I see a cluster of white bars and then a breakout with this alert, that's the kind of setup I want to take. So market ranges and then we get the breakout of the range. Generally, it's going to take out stops and give us an opportunity. Looking at this, I did come into the higher time frames, especially the 4-hour. Let me just, since we're day trading, these are the 3 main charts that I look at. So this was our short here. Now what we've got on the 4-hour is this. It's traded back into the cloud. So see the cloud through here, and it's trading into this cloud after having been bullish. Okay, so we're trading above the cloud under here. So we broke into the cloud around this level here. And what we can see here, we have lower highs, lower lows, retrace, retrace. It was an easy decision. We've got this yellow line here indicating the daily. These lines we've got 2, 3, 4, 5, as you can see. Midline is the mean, and I'm always looking for lower highs, lower lows, and the pullback into the mean. Okay, that's it. So this was really what I was looking at on the higher time frame. The 30-minute was favorable. Here it is on the 30. Bearish. We can see that, and this pullback in here. This indicator down here, this is our multi-time frame indicator telling us that all time frames were bearish. So we're going with the trend. We've got this retrace and a red signal. This is a good setup. So I was pretty happy to see this and jump in here with a short, and of course we know what happened after that. So those of you who are still in this trailing with your stop loss, I would say now is a good time to exit. See how it's flattened out down here, and we've got this divergence and this green, or these green alerts on the 30. Not a bad spot to exit if you're still trailing this with your stop loss. And that is a pretty nice outcome. So that was the CAD Swiss. The other one was the Swissy. Oh, by the way, guys, if you haven't already, jump on board with us. Join VIP. The website's tradingwithanthony.com. I'd love to see you in there. It's awesome value. What else can I say? So let's have a look at this one. This is the Swissy yen. So this one was a little bit different insofar as we had quite a strong spike. This orange line is a weekly level. So I was keen to short it off this weekly, given that we had this candle here and this imbalance that the market would most likely look to trade back down through. See, so we've come back down into this balance area. All right, so we see the imbalance, the spike up around resistance like that. Look at the red dots on our cloud. That's our level. So based on that, on the 4-hour, that was an easy decision to make. If we look left, this green candle here, this is a distribution level, 4-hour distribution level. Mark that up, and I'm always looking for I'll show you on the lower time frame. Let's go down to, so we've actually got two of these running, a daily order block, and we've got this 4-hour order block here. Strong level. Okay, the 4-hour, I was interested in that. All right, so when we trade into this kind of situation, this is a daily here and a 4H here, and then we get a red dot, it's an easy decision for me. Now, I was playing it a little bit cautious with this. I waited until this formed, and then I was, after that point, fairly convinced that this would be an opportunity, so we actually ended up entering here short. Stops can go above, well, there's a high here, but we've got this order block above the order block. But if you stick with the strategy that I've been talking about in previous videos, the thing that we do here is we measure, if we don't have a cloud, let me just show you how I work out. This is the stop loss here. I'll show you how we work out the stop loss. So we come into this trend channel, the cloud. Let me just bump up the cloud and I'll show you what I'm talking about. Just make it a little bit obvious. Right, that's our cloud. All right, you can see that. To work out your stop loss, where the signal fired, what we do is we grab this tool. This is just the price range tool. Here it is here. I've started. And we measure, we look left of the alert, and then we go down and we measure from this dot down to this dot, or just take this row and this row. It's pretty close to it. So we've got these row of green dots to this row and a little bit. That gives you your stop loss. So wherever we enter, which was here, and you can see how the stop loss worked out. So that was our short coming into the London Open. This blue line is the London Open, and another nice outcome. It didn't tick all the boxes. Okay, we shorted this. However, the multi-time frame gave us 3 out of 5 green, so it's not as high a probability as having all the check boxes ticked, if that makes any sense. In any case, you know, you just got to sum it up, or weigh up the pros and cons. Have a look at it. I mean, I really liked this overextended move here, and you know, thinking that the market would look to rebalance, which it has now. That was my call on that one. So that's the Swissy yen, and then the other one was the pound yen. 3 nice trades that we took yesterday. Okay, now if you haven't already, the link is below. Jump on board. There's another 30-minute dot. Where the dot fired, the majority of our higher time frame here was red. Strong pullback up into again. Look at this shaded zone here. It looks like a 4-hour and a daily nested order block here. Okay, so that was our short. Mind you, we had this strong bullish momentum here on the 4H, but it was this trade up into this level here, this distribution level, that really prompted me to take this, and this imbalance here on the 4-hour. Have a look at that. This thin candle here. Strong moves like that into a big level like this, it generally work out quite well. So that was the other trade we took, and if you're still in this one, I'd say now would be a good time to exit based on this green dot. Okay, I will use these alerts to help me enter the market, and you can also use these alerts to exit. The idea would be, with this alert here, perhaps close 2/3 of your position. No, that's not bad. Close, say, 65%. Now then you pull your stop loss down to be in the money, and then you trail the remaining 1/3 of your position. Okay, so that's just a bit of a recap on those 3 trades. And to understand our strategy, head over to our YouTube channel and have a look back through some of the videos, and you'll get a pretty good sense of how I approach the markets. So guys, with that, I hope you have a great day. Look forward to seeing you in VIP or the free Telegram. As always, safe trading, and we'll see you in the next video.